Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market and how they're moving their positioning. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance that is now turned support and rejecting it to the upside. In fact, from here, this previous move to the downside was created, confirming this area as resistance. After that, the market broke above the zone, and this previous resistance was turned support here. The market tested this previous resistance turned support and started rejecting it to the upside. In a situation like this, we could expect more potential bullish price action to be printed away from this area. Dropping down on the weekly time frame, what do we have? From a weekly perspective, we can see even more precisely how the market was respecting this area here and here, preceding these two rejections to the downside. After that, the market broke above that zone with this impulse, and all this previous resistance was turned support here. The market tested it and rejected it to the upside exactly as we wanted to see. Now, in creating this rejection to the upside, however, the market has also created new structure. In fact, what we can see is that the previous high is exactly here. From here, the market went and created that retest, meaning that this previous high is now previous resistance that, since the market has once again broken it to the upside, turned support here. So this is now new previous weekly resistance turned support, which we can identify with this horizontal box. We can also notice that, generally speaking, if you have an impulse and a correction and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement lining up perfectly with this previous resistance turned support, creating confluence of support at this area, which we could in fact expect this market to test and then to reject to the upside, creating more bullish price action also away from the monthly support that we have previously identified at the beginning of the video. So by looking at this market, at least from the monthly and weekly, we could expect a deeper test of this confluence of support and then to see more potential bullish price action being created away from this area. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, here, I explained all the reasons for which we could expect the creation of a higher high. Then we had this impulse and correction. From here, I explained all the reasons for which we could expect this impulse, correction, and continuation to the upside, which is exactly what the market gave us. And then in the very last analysis, after this impulse, I explained all the reasons for which from here we could expect a move higher for a retest of this resistance, which is in fact exactly what the market just gave us. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. Now, before we continue here, with the technicals that we have from a daily perspective on this pair and where we could be looking for the next potential move, let's first go and see what we have when it comes to the commitment of traders, because this is what hedge funds, so the big players in the market, are doing. Now, if we check the data for the GBP, we have to keep in mind that we are automatically checking actually GBPUSD, because all currencies on the spot are traded against the USD. So if you're checking the data for the GBP, you're actually already checking GBPUSD. And what we can see is that with the last report alone, we had 2,800 longs added from an institutional perspective and 2,500 shorts getting closed. We can also see how with the report before this, we had 25,000 longs getting added and 14,000 shorts getting closed. If we look at the net positions, we can see how we went from having a negative net positioning of minus 24K net positions with 52K shorts compared to 28K longs, so way more shorts than longs, all the way up to now having a positive net positioning of plus 51K net positions with 104K longs compared to only 52K shorts from an institutional perspective. Now, this shows how we went from having more shorts than longs to now having more longs than shorts. So it is quite clear how institutions are moving their positioning to the bullish side of GBPUSD, expecting more bullish price action to be developed. Now, this increases the probabilities that the weekly rejection away from this area that we were expecting could definitely happen, because this could be a quite interesting area since it is confluence of support, instead of which institutions could be adding more longs, further increasing the probabilities of seeing bullish continuation on this pair. So moving back down to the daily time frame, what we must identify. The first thing that we have to identify is structure. What we can notice is that this area is actually previous daily support from which these two rejections to the upside were created, which is now acting as resistance. Until the market will remain below this area, this market could easily continue lower. So only if we get a break above this resistance, only at that point this previous resistance would become support. And that is where things would get very interesting. So if we get a break on the retest of this previous resistance turn support, this is where we have very good probabilities of seeing institutional longing, increasing the probabilities of a potential reversal higher. So if we get the break on the retest of this previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.